Michael, we have the rand trading around 761, so a bit of strength coming back into the rand. Of course, we had the OECD yesterday calling for more intervention from our authorities to try and weaken this rand and make us more competitive.
Yes, Stephen. Look, it all comes down to jobs, really. Job creation in South Africa is at the forefront of most policymakers' minds. And in order to do that, of course, an economy has to become competitive. In order to do that, you either need to have a competitive exchange rate or a weaker exchange rate and a productive workforce. And I think the OECD addressed both of those fronts quite a lot in yesterday's report. And if you couple the OECD report with remarks from our finance minister, I think it's pretty safe to say that we're going to be seeing the authorities, both the Reserve Bank and the Treasury, increasing its reserve accumulation of dollars over the coming quarters, and that should translate into rand weakness, and kind of ties in with our view that the rand will weaken in the second half of this year.
Is this a trend we've already been seeing, though? Because with the latest gold and Forex numbers, it looked like there had been some intervention there by the Reserve Bank.
Absolutely. Both, again, from the Reserve Bank and the Treasury, we've seen that deposit balance of the Treasury becoming a greater liability on the Reserve Bank's books, implying that the Treasury has been depositing more foreign assets into that account. So that implies that, given the absence of any Eurobond issue from government, that government has also been buying some dollars, coupled with the Reserve Bank having to not only buy back or pay back a loan, but we also saw them buying some dollars actively in the spot market. So clearly, it's a trend that's already started. They weren't very active during the crisis, both the credit crisis and the sovereign debt crisis, but since then they've started to increase their reserve accumulation. And of course, the higher your reserves become, the more stable your exchange rate should be, because that's what the authorities are trying to tackle, this volatility in the currency. And high reserve levels tend to deter speculators from having a go at your currency. So that's why they want to increase these reserves.
Of course, the OECD pointing to 5% growth for South Africa next year. Finance Minister Pravin Gordhan, though, seemed to come out saying that appeared to be a little bit rich. What's your view?
Yeah, it probably is towards the optimistic side. A lot of the stars have to line up for us to get those kind of growth rates. I think we are all hoping that all the infrastructure spending that's been put in place over the past few years will start to bear fruit and will start to become more productive. We do think the rand is going to kind of weaken, so that will help our export sector. We're hoping with bated breath that labour productivity will start to improve. That will also be conducive to higher output within South Africa, and of course that could translate into high levels of economic growth. But I think the tough yards now start to come to the fore. We've seen a lot of cost cutting across the globe. South Africa is no exception, and we've come off some very low bases, so that's why your GDP figures and your earnings and things like that have shown a bit of a rebound. But now we've got to start generating the organic growth, and for the organic growth to come through, we need to see the consumer coming out and spending. And for that to happen, it comes back to that original point we mentioned this morning. It's about job creation, consumers feeling that they've got the ability to go out and spend, that their jobs aren't on the line, etc., etc. So it's got to come from the consumer ultimately, and at this stage the consumer globally is still a little bit pedestrian.
Well, we had the dollar losing a little bit of ground against the euro, back above 130. And of course, we had some weak housing data out of the US last night again. And this seems to be a continuation of what we have been seeing over the past couple of months.
Yeah, I definitely think the risk for the US housing data is to disappoint this week. Remember, we're not seeing the windfalls of that tax relief that we did in the first couple of months of the year. So now that that's out the way, it's going to be, again, very hard for a momentum or the improvement in the housing market to maintain its momentum. So that's possibly another reason why we think that the rand is vulnerable this week. If the housing data of the States disappoints, it's going to bring back risk aversion globally, and that's probably not going to bode well for our rand.